What's up, YouTube? It's Todd Horst here with Tasty Tracker, and today I have another small account challenge update. It is Sunday, so the market is not open, but I thought I would go through our past week and then look at positions that we could put on for next week. So just right off the bat here, we started in at the beginning of November, so we're already up 139, 110 for November, and then 29 already, even though it's only the 4th of December. I was able to close out a position late last week for 29. That was the PTON position. So if we come over here, the account balance again started at $1,000 at the beginning of November. And so we're already up about 18% in that 1 month. So I think, again, that's pretty good. Much better than what we would expect or target for a normal sized account. This is only $1,000 account. So if we go over to the positions, we have just the CVNA and the plug. If I go over to here, we can see that Carvana is already up about 42%, so probably be able to close that position this week, and then probably the plug position the following week. These haven't really had much change as far as price or even volatility. So while the market has been up recently, these have just been kind of stagnant, and so these have been more of a longer, or I'll say more typical hold. So let's go to history. How long did I hold PTON? For 15 days, and that is right on average. I would say if it doesn't close again, I think I've said this before 3 days, then it's typically around 12 to 15 days. So if I come down here, yeah, my average days in is 6 right now. So okay, so back to the account. So yeah, so I expect this to close. When that does close, we can see how much capital it'll free up. That will free up. Did I hit edit? There we go, another $210. That would boost us up to, let me cancel this, 600, yeah, well, yeah, another 200 on top of that. So we'll be right at $1,000 free. So definitely have room to put on another position. Okay, so let's go over to look at SPY for now. Generally speaking, this whole year we've been abiding by this downtrend. So I think it's a pretty obvious situation here to go short at the market and expect a rollover. But of course, if that's what is the easiest option, then that's probably not what's going to happen. I think we could see a year-end rally up here to 415 that would hit us at this line here, or even 420. I don't expect much higher than that. I don't think we'll make a higher high than what we have here, which was around 430. Of course, anything's possible, but I'm kind of betting on us being neutral to bullish here for a couple weeks through the end of the year, and then potentially making a new low, or at least coming down here and revisiting the 360 area. We'll see. Take that day by day. So I guess the one thing I wanted to say about PTON here was it was just above a 1x return multiple, which is not great. It's obviously 1 is the baseline, so I wouldn't close it below a 1. I would just continue to hold it until it came back up to a point where we were at what we would expect to earn on a daily basis. So, but we were able to hold for 50, which with an account this small is not the end of the world either, because there's going to be a larger return. It's not as optimized as if we could really take advantage of the return multiple, but it is what it is. So here's the third version of the short ideas page that I've been working on. Again, that started off here as a spreadsheet, just trying to work out the kinks and put my ideas down onto paper. And then the first version was using Yahoo, second version was using TD Ameritrade, and this one I'm using Tradier and Tastyworks. And so far, I've been liking this version the best because it is the most accurate. It actually goes out to Tastyworks to figure out the capital requirements, and that's really what I'm after here, is to utilize margin the most efficiently as possible. So that way I can take this $1,000 account and put it up, get it up to an account value where we have some more wiggle room and can take some more risk. But at this point here, if we sort by default, it's sorted by price, so you can see lowest to highest. But if we sort by the Tastyworks value indicator, which is just a weighted formula, it's nothing big here. We can see the top of the list is Chewy. That's obviously because we have earnings here. So anything that has earnings is naturally going to increase the volatility. It's going to float those up to the top. So if you want, you can exclude those here, but I don't mind seeing them just to see if it's anything I would be interested in. So the first one we would look at is if this is a normal sized account, normal being 10,000 or more. I would look at Chewy. And this is something that could potentially put on in another account. I don't have anything in on Chewy at the moment. So if we just draw a support line, we can kind of see something like that maybe. And then with a smaller channel up here, I think it's probably, we're either at a stopping point here, but if the market does continue higher, then I think it's pretty likely that this sees 50 again. So you could put a position on here to try to capitalize from 45 to 50 if you wanted to do that. But with earnings, again, this would be riskier, so something I'm not interested in with the small account. But earnings this season have been, I think, pretty mild, pretty okay. There have been some surprises both ways, obviously, as there always is, but for the most part, they've kind of been a non-event. So, or erring on the side of good. So I don't know that I would necessarily shy away from this just because it's earning in this season. Each season is a little bit different though. But I'm not going to do that for a small account, obviously, as I said. Shop is the next on the list. So then we come over here. And I actually like this chart. That's why if you notice at the beginning of the position video, I had a position working here for shop. Actually, this is my second attempt at making this video. So I do like shop. It's above all the SMAs here, the 50, 100, and 200. And I think if we came down here to 40, that would be a support level, even ignoring the SMA. Then if you come down here to 30, we have, it's below both the SMAs, but we have very strong support where it's been basing all year, or for 3/4 of the year, we'll say. And then if we get up here above the SMAs, that would put us right about $34. RSI is getting hot, which, you know, this isn't, the second it hits top here does not mean it's going to roll over. A lot of times you'll see a blow off and see a really nice move into a point where it's really overextended before it comes down and corrects. So I actually like this position, especially if we get something down here at the $30 mark. Now it's recommending we get a 36 strike. So if we go over here to put that order in, the expiration is January 20th. The 36 strike puts us right here at a 21, which is totally fine. I think we could do that. We could also go with the 35.5. Yeah, and I'm actually thinking now maybe I will go with the 36 strike. Originally, my order was for the 35, putting us down at the 18 delta. But I think if we do blow off into a higher RSI, we can capitalize it better on the 36. We might even be able to get that to close sooner. So if 36 is down here, and it's right at the top support of kind of this group here, this group here, this group over here. So let's just put a little line over here. I'll move this one up. 36. All right, so that's sort of where we would target, and then that would be on January 20th, something like that. So that is a whole lot of time, and we even have some cushion here. If we continue to chop above this SMA, then these SMAs would start to curl up and act as really good support. So you could see potentially something along the lines of the SMAs trending that direction. in which case it would be above our strike and offer great support. So we'll see. So actually, yeah, I think I'm going to go with the 36. You can definitely do a 35, put it at a little bit safer strike. But the other thing we're going to do is, because it's Sunday, we're going to increase this a couple bucks to 160. Let's do 162. That way, with the morning volatility, hopefully somebody will give us that fill, and we'll get a nicer fill than if we were to just come in here at the tail end of the morning action. So this does occupy 353. That would be another reason to go with 35 if you wanted to be safer. I'm a little okay with that because, first of all, the premium is very nice, and then again, expecting Carvana to close this week. So, but certainly now that that puts us down to 424, we would not want to put on any other positions beside this one. So that's it. We'll leave that position work and hopefully get a fill in the morning. If you could do the YouTube things, that would be great. Share with your friends. And if you have any questions, let me know, and I'll talk to you next time.